Hey, hello, everybody. So this is a synopsis to give you some guidance to get started on your project. Now that you finished with the material in the textbooks. So let me just go. I'm just going to go through some main points to get you really started in earnest on your project. And remember, next week when we meet after Thanksgiving, the entire 3 hours will be devoted towards the project. So don't you still have plenty of time to work on the project. Any questions that you might have, again, we can we're doing a Zoom class tonight for Q&A, and then next week, as I said, we'll spend the whole 3 hours on the project. All right, so let me just go through some main points to get you started on working on the project. So the first thing I'm going to do is open up the instructions for the written report. Okay, so your report should be 10 to 15 pages, including charts and graphs. You don't have to make all these graphs and charts from scratch. If you find some interesting graphs or charts on or illustrations on the website, on the web, you're free to use those. Just make sure you cite your sources. You do have to have a reference page at the end of the project. The 10 to 15 pages is excluding your reference page. All right, so the report consists of 4 parts. The first part, this should not be more than about a page. It's a brief company description, talk about the company, its history, its background. Think about who is the firm, what do they do, where are they? All right, then for section 2, this is basically a macro view of the company and the industry. So you're going to be looking at all of these economic indicators. Just think about the economy in general. How is the economy affecting this company and this industry, and how is the economy affecting this firm? What's the outlook based on what's going on in the economy and what you think is going to happen going forward with the economy? So you're going to research the current economic climate and outlook. And like we've been talking about all semester, economics is more of an art than a science. So there's no right or wrong answer here. You're going to get this data, but then you should provide your own opinion on what you think the economic forecast is going forward. So we're going to go over the economic indicators in a few minutes, but these are some major ones that you should definitely include in your analysis. Gross domestic product, GDP is a big one. Other indicators that are important for all of your industries and companies would be the unemployment rate, the consumer price index, that's a measure of inflation, the producer price index, that also measures inflation, but the CPI being the main one, the consumer sentiment survey, that's the Michigan Sentiment Survey. I have a link for that. I'm going to talk about that later. Not quite as important, manufacturing and inventory levels. Depending on the company that you have, retail sales might be important. And depending again on your company, economic indicators regarding the housing industry might be important. But definitely for all of you, you should be including GDP, the unemployment rate, and the CPI. Then just look through these economic indicators and add any other ones. There's a slew of them. Add any other ones that you think might be important. Oh, I forgot interest rates. Interest rates should actually be in here. That kind of goes along with the CPI, but interest rates are on their way up. You should definitely talk about interest rates. All right. Oh, and also you can talk about the strength of the dollar. If your company does a lot of business internationally, the strength of the US dollar would be important. Okay, then for part 3, you're going to do an industry analysis. So you're going to need to look up, talk about the industry and how it's defined. Look up the NAICS codes. That is, you can find that online. There's several sources. Probably when you use S&P Capital or Emergent, it'll be up there. I'm pretty sure it's up there, but you can do a Google search and find those very easily. I'm going to show you how those are defined in a minute when we look at a sample report that I have on Moodle. So anyway, you want to definitely look at the codes and talk about the codes. There's a main code and then several subcodes. The Herfindahl index, this is this HHI. This talks about how concentrated the industry is. So whether you're in a very competitive market or whether you're in more of an oligopoly. This is optional because it's really difficult to find the HHI for some of these industries. But if you can find it, then by all means include it. But you can just talk about the competitive environment of the industry in general and how competitive is it? Or, is it just a few large companies? But the HHI index, which I'll talk about that more in detail in class next week, but it defines, it's a formula and the number defines how competitive an industry is. Okay, so, but anyway, that can be hard to find that number. If you have difficulty finding it, then don't worry about it, including that in your report. Okay, and then also in part 3, just think about the competitive environment of the industry. And then other topics that might be relevant would be things such as demographics, changing expectations, the legal environment, international trade, just to name a few. So just anything that you can think of that's affecting this industry. All right, and then in this section, you're also going to include 2 regression analyses. I'm going to talk about this more in detail when we're face to face. I don't want you to, you don't have to concentrate on this week. For this, I think if you guys can just complete or do the research to complete part 1 and to complete part 2 by next week, you'll be in awesome shape. Or at least, start doing the research by next week for these first 2 parts. For the regression analysis, I'm going to really spend more time going over that in detail in class. But let me just talk real briefly here. You're going to so remember, a simple regression analysis is when you have one independent variable to see how that independent variable is affecting your dependent variable. And so you're going to run one regression analysis where you're comparing how labor costs affect your gross profit. So gross profit is your dependent variable. The labor cost is your independent variable. The labor cost numbers are on Moodle. I've already got that. I have that data for you. So you're going to look at, you're going to calculate the gross profit for your company, which is total revenue minus cost of goods sold. And you're going to calculate the gross profit for each quarter and then find the percentage change for that quarter from the same quarter in the prior year. So you're going to compare, you're going to see how a change in labor costs, an increase or decrease in national labor costs have affected your change in gross profit. So that's the first regression analysis. The next one is you're going to see how GDP affects your sales growth. So you're going to look at the change in revenues from one quarter to the quarter a year before prior, and you're going to compare that to, you're going to see if GDP is affecting your sales growth. So I realize that not all of you have had the stats class yet. There's a tutorial on Moodle that explains to you step by step how to run the regression analysis and how to interpret your results. So we'll go ahead and look at that on your own, and then we'll go over that in detail when we meet face to face next week. I don't want to spend the time on this brief recorded Moodle session going over all that, but that's the gist of what the regression analysis is. Now, so I have the GDP data on Moodle for you, and I have the labor cost data on Moodle. you'll have to get your individual company data, obviously. Now you can also add other variables. So you can add as many independent variables as you want to both of these regression analyses. So those are the two, I have the GDP data and the labor cost data, like I said, but also you can think about the unemployment rate. Some past groups have looked at the change in the unemployment rate and have seen how that affects gross profit or sales revenue. Also, a change in retail sales is another good one to look at. The change in consumer confidence is also a good one to look at. And then, this was really interesting. One of the groups last year had Lowe's as a company, and they looked at the number of named hurricanes. So the number of named storms they regressed that against their gross profit and their revenues, and they actually found a positive, significantly positive relationship between the number of named storms and I think they regressed against sales revenues and the sales revenues for Lowe's. So just think about any other variables that might be relevant, and just put them in there and see what happens. So just to repeat this, some additional variables to use would be the change in the unemployment rate, change in retail sales, change in consumer confidence. Inflation could be another one to possibly use. So anyway, and then next week I'm going to talk in more detail on how to actually run this regression analysis. I'll take you through a step-by-step process and talk about how to interpret it. Now, when you run your regression analyses, you feel free to send them to me if you want, do your interpretation, and feel free to send those to me, and I can let you know if you're on the right track as far as interpreting the data. Okay, so that's in part 3. And then for part 4, you're going to tie everything together. Tie together your industry analysis with your economic outlook. Analyze the firm with respect to the industry and the economic outlook. How sensitive is the firm to these economic conditions that you've been analyzing? And just how should your firm maybe respond to increased competition, changing expectations, the regulatory environment, just anything you can think of. How should your firm respond to the issues? We're coming out of COVID, so you might talk about COVID, talk about how they would what the outlook is like for them coming out of COVID. What's the outlook like for them in a situation of increased interest rates? And you can also in this section discuss whether or not you would invest in this company. Would you buy their stock? You don't have to do a financial analysis for this project, but you can, after studying this company, you might have an idea of whether you think they're, based on the big picture, would you buy their stock or not? So you're going to use this report if you have the same team, the same company rather, when you get into the finance class. This report is going to be parts of it you're going to break down, and that's going to be the beginning of your report for the finance class. All right, so just to repeat, for next week, after you watch this video, what you should be really concentrating on to give you a leg up is the first 2 sections here. Start doing research, and even if you have a draft written on the first 2 sections by next week, you're in really good shape. Okay, so that's the written report. Let me those are the instructions for the written report. Let's look at a sample here. So here's Wyndham. This is from spring of 2020. So remember, spring of 2020 is right when COVID hit. So this is kind of an interesting take on Wyndham. And then Kroger was last spring. So I mainly wanted to show you this because they did a good job with their industry analysis. Okay, so Kroger's a grocery store, for those of you who don't know. So Kroger, here's their beginning here, where they just talk about the company background history, just one page. Okay, then they talk about the economic outlook. So GDP, of course, is a big deal for any industry. So they talk about GDP. And this is spending. This is spending in March. They talk about the unemployment rate and how that affects Kroger. The Consumer Sentiment Index, this Michigan Consumer Sentiment Report, definitely you should include that. They talk about the CPI and the PPI, measures of inflation here. And of course, being, Kroger, minimum wage is a big deal. And last spring, this minimum wage was increasing. There was a lot of talk about increasing minimum wage. So they did increase it. So that was a big deal. You can, if it's relevant for your firm, you can talk about minimum wage and the increase in wages. Also, talk about, I just realized one thing that's really kind of pertinent this right now is the great resignation, or the shortage of workers and supply chain issues. So definitely probably talk about the supply chain issues if it's relevant for your firm, and worker shortages if that's relevant. Okay, here's the industry analysis. So you see Kroger operates under this. This is their main NAICS code. That's supermarkets and other grocery convenience stores. So that's the main one. And then there's these subcodes, you see. So they have, so you have basically, I'm sorry, I said it backwards. This is the main one. So the sector is retail trade. The subsector is food and beverage. Then the industry subgroup is grocery stores. And then the industry is supermarkets and other grocery stores. So I want you to drill down from the sector all the way down to the 6-digit code. So you can, so make sure you have this in your report for your company. Then, as I mentioned, the HHI, not that important. I don't think they included it here. But I mean, we all know the grocery industry is very competitive. Okay, so then here they have, for the competitive environment, they did do a Porter's 5 forces. You can do that if you want to. And then they talk, you can also do a SWOT analysis if you want. Then they talk about some macro environmental factors, technological factors. Then, it's pretty much whatever you want to include down here. Political issues, legal environment, there might be some regulatory issues affecting your industry. Okay, and then here they do the regression analysis. As I said, we're going to talk about that in detail in person. I'm not going to go into that in this Zoom call or Zoom video. Okay, and then don't forget a conclusion. You want to wrap everything up with a conclusion. So make sure you have a conclusion. And then your reference page. So this is a good one to look at. And then there's also the Wyndham examples too. All right, so let's see here. Down here are some helpful resources for the project. So I think you all have probably been, you probably all have a Capital IQ account, but if you don't, this link will help you to get an account, account set up. You just put in your Nichols email and address and set up a password. So you can find company information from Capital IQ. Mergent Online is another one through our library system. You can enter the company ticker symbol in the box and find your firm. This is the regression analysis tutorial. These are some really good websites just to find some economic data, macro trends, the Bureau of Economic Analysis, and then this Fred website link. Lots of good economic data here. These are the this is the data for GDP, and this is the labor cost data. And then these are the instructions again to run the regression analysis. Here's the tutorial for the regression analysis. This labor cost data, I need to update still, and I'll do that over the break. I have to upload the most recent files with the most recent data. That's from the FRED. I get that off of the FRED website. All right, here's instructions for obtaining the HHI. This is the HHI explained. These instructions are kind of problematic. So as I said, if you can't, you can try this, but if you don't find it for your company or for your industry, it's fine. All right, so let's look at first let's look at the major economic indicators. This is just a tutorial that explains some of the major economic indicators to use. So there's basically 3 types of economic indicators. There's leading indicators, coincident indicators, and lagging indicators. So a leading indicator is an indicator that's going to forecast what's supposed to come in the economy. Coincident indicator, there's not too many of those. That's what happens at the same time. Then a lagging indicator tells what has been, how the economy has been. So let's take a look at some of the leading indicators. So the stock market is very forward thinking. The stock market is not, I didn't mention that before because it's not, I don't think it's really that big of an indicator for this project. The stock market, it can be important, but not necessarily, because like right now, for example, the stock market is pretty overvalued and due for a correction. It really has nothing to do with what's going on with your company or your industry. But if you go back to COVID, when COVID hit, stock market had a steep decline. Within 3 months, it had rebounded. Why had it rebounded? Because the stock market is very forward thinking, and GDP really didn't go down that much. GDP went down in certain sectors. Like the services sector had a huge drop, but other sectors were fine. So GDP, the growth in GDP actually only went down by like 3%. So the point I'm making is the stock market realized this. Companies realized this, that it wasn't going to be, it was a V-shaped recovery instead of a U or an L. And so the market was going up because it was basically a leading indicator that the economy really was going to be okay. So anyway, the stock market is kind of fickle though, so I don't typically use this as a main indicator, but you can talk about it if you want to. All right, manufacturing activity, that can be another leading indicator. That is another leading indicator because it influences GDP, so you can look at that. Inventory levels, this can mean 2 different things. If inventory levels are high, it could mean that we're gearing up for an economic expansion, or it could mean that inventory levels are high because no one's buying anything and we're going towards a recession. So a lot of these indicators, you got to be careful because it can mean more than one thing. Okay, and then retail sales, depending on your industry, or company, you might want to use retail sales. Of course, if the retail sales numbers are up, that's a good sign. It's a leading indicator that the company's going to do well. People are spending money, the economy's going to do well. One problem right now, though, with this retail sales number, and you may mention this if it's relevant for your company, is the supply shortages that we're having. So, for example, the Gap reported their earnings yesterday, and their stock went down 12% because they said they're going to have millions of dollars in losses because they can't get product to their stores. So that's really hampering the retail sales. So here's a take on retail sales. Retail sales might be down, but that's really a false negative. In other words, if retail sales are down or not as up as much as you would expect, it's not because of the lack of demand, it's because there's not anything out there to buy. And so that could be that, you know, it's a negative, but it's really not a negative. It could be a positive in the long run. So you might mention that issue that's happening right now. Okay, and then building permits, real estate market. Of course, if building permits are up, that means that more houses are being built, so that would be good for the economy. That if people are buying homes, that all trickles down, because if they buy homes, it means that they are going to buy durable goods and be spending money on their houses. Durable goods meaning goods that will last you longer than a year. So a durable good is like a washing machine, you know, appliances and so forth. The housing market is another leading indicator. Okay, new business startups, not as important. I wouldn't bother with that one. Okay, let's look at some lagging indicators. Lagging indicators tell us what's happened. So if GDP, if we look and see that GDP has increased, that means that the economy has gotten stronger. That's good news. If we see that GDP is decreasing, it could mean that we're going into a recession. So remember, two consecutive quarters of declining GDP would mean that we have gone into a recession. It's a lagging indicator because we don't know till afterwards. So definitely look at the, and when I say look at GDP, you want to look at the growth in GDP. So you should look at the quarterly growth, you should look at the annual growth, and so forth for GDP. Income and wages, self-explanatory there with being a positive sign if income and wages are up. The unemployment rate up, of course, the unemployment rate, of course, we want that to be lower. And so you can look at if unemployment's going down, that's a good sign for the economy. And then the consumer price index is a measure of inflation. That's very important today. We're seeing that the consumer price index, and this is the change in the CPI from one quarter to another, or from 1 month to another. So like, for example, for getting back to the regression analysis, if you're looking at quarterly, you're comparing quarterly GDP data, and you're comparing to quarterly sales revenue and quarterly gross profit. Now, if you want to compare month to month, that's fine too. You compare monthly changes, but then you would have to calculate the monthly change of revenues and gross profit. So it doesn't matter. You can do it quarterly from the quarter a year ago, or you can do it monthly, but you just have to make sure you're comparing apples to apples in your regression analysis. All right, and then so I've talked about the consumer price index, and the producer price index is also a measure of inflation. That's the cost of producers, cost to produce things. So if that's going up, then it's going to also, that also speaks to inflation. Strength of the US dollar, we can talk about that. And then of course, interest rates. Higher interest rates are going to mean that the economy could be slowing down. If interest rates remain low, that's good for economic growth. Corporate profits, higher profits means that correlates with the rising GDP, the booming economy. Okay, so anyway, that'll give you some idea on some of the indicators, leading and lagging, to use in your report. Okay, so how do you find the information about these indicators? Well, there's an economic count. You can Google GDP, or you can do your research and get information on GDP to get for your regression analysis. But if you want to find out what the latest information is, you can go to this economic calendar. Here's a link. There's several of them. This is from MarketWatch, and so this is what's happening this week. And you can look at previous weeks, and you can look at the weeks going forward too. But you can look at these calendars and pull up the previous weeks too. Okay, so let's look at some of this stuff here. Okay, so here's GDP. So this is the third quarter GDP. So this is the change in GDP. So you can look at, if if you click, see if I click on this, here's an article. You can find an article about it and they'll give you some really good information there. And you can find, you know, I actually have provided the quarterly change in GDP for you on Moodle through the Fred website. All right, so anyway, so this is how this works. This is the previous number. So the second quarter GDP growth was 2%. This is what they forecasted the third quarter was going to be, an increase in GDP of 2.2%, or GDP growth of 2.2%, and we have 2.1. So it's in line. You can also look at, I would definitely look up the annual GDP growth just to have that for discussion purposes in your for your report, and you can compare the annual GDP growth, and you can see what economists are forecasting the annual GDP growth to be next year. So, but anyway, so these are the latest numbers for GDP. So we're growing at about 2%. That's it for the quarter. All right, and then let's see what else here. Personal incomes grew. So here, look at personal income. They thought it last quarter decreased by 1%. Oh, this is monthly. Let's see. This is probably monthly. We had an increase of 0.5. They thought it was going to increase by 0.2. So a lot of times, what matters with these economic indicators, just for your own personal edification, it's not really so much the number, but it's whether the actual number is better than what the analysts think is going to happen, or is it worse than what the analysts think is going to happen. So typically what happens is if it's an upside surprise, if these numbers are better than they think, the market tends to go up. That's good for the market, stock market. If it's a downside surprise, a negative surprise, then the market will sell off. So anyway, here's inflation. So this just came out this morning and it was in line. So core inflation is, they thought it was going to be 0.4%, and it's right in line. Consumer spending is high. Look at it was 0.6% last month. It's 1.3% this month, higher than what they even thought. So people are spending money. So this is, I didn't mention this one, but this is a good one to talk about too, consumer spending. All right. Here's the Michigan Sentiment Index. So it hasn't come, it's supposed to come out today. I don't know why it's not out yet, but definitely look at this. I'm going to show you, I have a link to this. I'll show you in a minute. They think it's going to be unchanged at 66.8. So we'll see what happens. This is a really important indicator. So make sure you talk about this. All right. So that's this week, and let's see what's going on next week. We've got home sales. Oh, consumer confidence index. That's like the Michigan Sentiment Report. You can look at that one. We have every Thursday, this comes out. This isn't as important, but it's kind of interesting to follow. Initial jobless claims. That's people filing for unemployment for the first time. That's interesting to look at. And then continuing claims, whether they've gone up or down. But this comes out once a month. So make sure on next Friday, you look at the unemployment rate. Last month, the unemployment rate was 4.6%, really low. The natural unemployment rate's around 5%. So anybody who wants a job should be able to get a job here. This is good for the economy. So this is going to be interesting to see what the median forecast is and what it actually ends up to be. So we'll definitely take a look at that. And then this is what happened last week. Retail sales were up. Let's see, up higher than what they expected. This is retail sales excluding auto sales. Here's housing starts and building permits. Okay, oh, I forgot at the bottom of this, they have a really cool GDP forecast. So definitely use this. So look at, this is what they think. Let's see, they think it's going to happen in Okay, this is the annual forecast. This is interesting. So for 2022, they're forecasting GDP to be 5.2%. So they're expecting our GDP to grow by 5.2%. In 2020, we had negative GDP growth of 2.3%. That's pretty good considering we are in the midst of COVID. So only a 2.3% decline in GDP. So anyway, they're expecting a pretty good year in 2022, and then they think that's going to slack off. I'm sorry. Wait a second. What have they done here? Okay, I'm sorry. This is 2020. This is the forecast for 2021, 5.2, which makes sense because we're coming out of COVID. And then for next year, they're forecasting 3.6% GDP growth, which is pretty good because our average is usually around 3. So that's still higher than the average. So definitely incorporate these numbers in your discussion. Last year, what they think it's going to be this year, and next year, the following year rather. I mean, last year, this year, and next year. Okay. Anyway, those are the annual forecasts for GDP. Okay, so let me go back to this. All right, so that's the economic calendar. So look at the economic indicators, read that just to get a little quick tutorial on the economic indicators, what they mean. Look at the calendar, and then you can look at other sites too. These sites down here are going to have some good information on your on the different economic indicators. And at this calendar, if you click on any of those indicators, it should bring you to an article that explains it in more detail. Okay, so this is the last thing I want to talk about this morning is the Michigan Sentiment Report. This is just a survey done by the University of Michigan. It's a monthly survey where they basically ask people what they think about the economy. And it really, you would think that a survey would not be that important, but it is actually very important because if people feel good about the economy, if the public has a positive feeling about the economy, if their sentiment is good, what does that mean? It means they're going to spend money. They spend money, it means more profits for companies. They make more products, provide more services, GDP increases. So this is a really interesting survey, and as I think this is one of the most important indicators. And so you can read this. Make sure you read all this. This is a summary of the of what the latest readings were on the Michigan Sentiment Report. So you'll definitely read this. You can incorporate some of what they're saying here into your discussion. And then you can look and see what's gone on here. So this is, I was really shocked that this number has gone down so much, to be honest with you. So you can read and see, this is the current level. These are really high levels. If it's over 100 or around 100, people are really positive about the economy. So let's see here. This was before COVID. It went way down when COVID hit, as you can see, as expected. Then went way up because COVID, the economy didn't crash and burn. It was a V-shaped recovery. People were getting stimulus money and people are working again. What else were we talking about? There's a wealth effect from the stock market and so forth. So anyway, then it went back up. But now we're seeing this trend, which really kind of surprises me, where it's down quite a bit. So this is telling us that maybe we're going into a recession. Who knows? But anyway, you can read this and get your perspective on it. But the reason that it's gone down so much is because people are worried about inflation, rising prices. And so we're seeing this price pressure where people are spending more money, but prices have gone up, and it's that really, traditionally when people are spending more money because prices have increased, that means the economy is going to probably contract. And so, we might, I don't know that we're going to see the growth in GDP that they're forecasting for next year, because this doesn't indicate that we would. So this is a conflicting thing right here, this Michigan sentiment, in my opinion. And anyway, as I said, economics is more of an art than a science, and you do have, sometimes you see these conflicting, you've got these conflicting sentiments. So we'll see what happens. So it's going to be really interesting to see what happens to what the latest survey results are that are coming out tomorrow. So make sure you look at that. Or I'm sorry, I think it's next. I think it's next Friday. No, that was the unemployment. But anyway, look at the calendar again, and you'll see when the latest Michigan sentiment results are. So make sure for definitely that in your report you have the latest Michigan sentiment, Michigan consumer sentiment numbers, and the latest unemployment numbers. Those are coming out soon, this week and next week. So anyway, when you click on this link, it'll update with the latest numbers. And so anyway, make sure you read this. This is very interesting, and then it talks more about the history and so forth, and different analysis of this. And so you can look at these numbers. You can take the monthly numbers, and you can regress the University of Michigan sentiment numbers against your gross profit on your company and against your sales, and see if that's a statistically significant variable at predicting your sales and gross profit. And so so if you're gonna compare, if you're looking at quarterly data for your company, then what I would do is I would take the last, I would take 3 months worth and just average it for the consumer sentiment, so you can compare quarterly to quarterly. Okay, so that's the Michigan sentiment information. And I think that's all I wanted to go over for this Zoom video. So hopefully, that gives you an idea of to kind of get you thinking about the report and to get started on it. And as I said, just look at focus on, oops, didn't mean to do that. Just focus on the first two sections of the report. There we go. Wait. So just to sum up, when if you have some time over the break, start. I mean, I'm sure you've already probably started this, but try to get the first two sections done by next Wednesday, and you'll be in good shape. Okay, so I'm gonna post this video, and then get Zoom in tonight if you have any questions, and in the live Zoom session. And then we will, as I said, the next class, the next face-to-face class after Thanksgiving, we will spend the whole time on this, after we go over the exam, spend the whole time on the report, going over regression analysis and so forth. And I'll also give you some time in class to get with your groups and to work on the report. Okay, have a great Thanksgiving, everybody, and I will see you all next week. I'll see some of you on Zoom tonight if you have a question.